So the strategy of the company is to construct a base case 3,500 ton per day processing plant producing 120,000 ounces of gold a year, and then to double our ounces to 5 million ounces of gold. We're on a major gold district. Here are the investment highlights. I mentioned our base case is 120,000 ounces, and we're fully permitted to construct and operate the mine for 10 years. That's all open pittable. We've got 1.12 million ounces permitted, and that's broken down across 3 pits. The main Landia open pit, 900,000 ounces at 3 grams, high-grade Mestiza pit 120 at 8.6 grams, and America pit's about 100 at 4 grams. I mentioned we're developing it. We can also expand this by adding in underground. So there's another 50,000 ounces easily from underground. We've got 1.2 million ounces of underground resource, but that'll be done during production. We've got pretty strong economics. Our reserve level, our PFS level is 690 all-in sustaining cash cost. So that just throws out heaps of cash at today's gold price at $1,860. We're at $23 an ounce in the ground, and we've got $10 million of cash in the bank after last placement to the interims. We reported that. Fairly undervalued, I'll come on to that. Potential for early cash flow for a smaller startup plant or toll milling, and we've got high-grade resource and reserves. Nicaragua, for those unfamiliar with it, is very mining friendly. The government gives you concessions for 25 years. You can own 100% of it. There's a 30% corporation tax, 3% royalties off the top. There are half a dozen companies operating here. We've been here for about 15 years. And the government's just permitted additional feeder pits for us. So the proof's in the permitting. Here's the project. It's a historic mine. We've got 2.3 million ounces, I say, but it did produce over 500,000 ounces back in the 1940s and 50s. I picked it up mainly, it took several years to actually pick up all the concessions, but we've now got 580 square kilometers. This represents a few percent, 3 or 4% of our area. And it's low sulfidation epithermal vein system, and all these veins can be expanded. These vein systems can be expanded by drilling along strike and or drilling down depth. This is just a fraction of what we've got so far. This is the main Landia vein. I show it because this is what we got a pre-FS on, and the first 900,000 ounces of that is an open pit, and then there's 400,000 ounces of underground. We've got a drill rig operating at the moment, which we announced on Monday, and it's down here. If you can see my mouse, we're putting in 4,000 meters of drilling in this area. There are 2 high-grade feeder pits. One's at this end of this pit, and the other's in this central zone, which hopefully you can see my mouse under the words Landia. And I walked along this twice last week, and the drill rigs are going away at the moment. So that's just really much tighter drilling. So you're looking over here, and just in the whole thing, you're looking at about $2.2 billion of gold. And obviously that's in situ metal value, and the vast majority of that's the pit. And here's some of the drill intercepts. And so one of the things we're doing with this tighter drill spacing is replacing RC drilling, which is sort of, and that's part of the program, and doing just much tighter drilling. But we've got some excellent drill results. As you can see, 10 meters at 34 grams over an ounce, 25 meters at 7 grams. So that's an RC drill hole here. That's going to be replaced with a diamond core drilling to give a greater certainty, and we can see the structure ahead of mining. This is what's permitted. We permitted in May this year, Mestiza and April America pits. The plant's centrally located. We have bought the vast majority of this land, which I'll come on to, and the underground sits underneath the pit. So we effectively have that permitted, because when you can permit a pit, they'll let you permit what's underground, but we've got to drill it out properly. In terms of the mill feed, fully diluted from that permitted open pits, the total mill feed is 8.5 million tons. So this is the material delivered to the processing plant at 3 grams. A gram's about $60 at the moment. So you're 3 times $60, $180 a ton rock, and that contains 847,000 ounces of gold after metallurgical recovery. We're permitted to produce 120,000 ounces of gold a year, and I mentioned we can top it up by 50 a year with the underground. This is a high-grade scenario, which we can either toll mill or put through a smaller plant, Or even if we do the bigger plant, we would mine this first. So the grade's 50% higher. So it won't take you much to do your maths to figure out. And if we high grade the main pit where we're drilling now, we end up with this 1.6 million tons of 50% higher grade at 4.6 grams containing 250,000 ounces of gold. That's going to massively increase the payback, boost the NPVs, and increase cash flow and all the rest of it. It's good stuff. And there's plenty to be gone around. In terms of resource expansion, I'm going to go through this quite quickly, simply because I know there's going to be a number of questions. The resource expansion, these are the existing core 3 vein sets. We can drill down those ore shoots along strike and add almost 1 million ounces, we think. It's just taking it down another 50 to 100 meters. And there's no reason why that shouldn't extend. And then these satellite areas, we think Cacao in particular has got 500,000 to 1 million ounces on it. So that's how we get to, with a reasonable degree of confidence from our geologists, to get towards 5 million ounces. And this is just exemplifies it. And here's the pit boundary. And underneath the pit, there are 4 drill holes. Each there's 193 meters there. The lower one you can see is 6 meters true width at 10 grams. And there are 4 drill holes. It's completely open, so we need to drill down deeper here. But we're confident that that's going to be more gold underneath the existing holes. This is the district. You can see it's highlighted. It's the outline of it. I'll look at that in your own time. In terms of the upside, these epithermal vein systems are normally the biggest ones in the world on very structurally complex settings. And this is a structural geological model. So you have a fault running through the Earth's crust here on Landia corridor, a parallel fault. And this is the buckling of the Earth's crust between the Pacific plate subducting onto the Cocoa plate. And we're about 100 miles inland from the Pacific Ocean here. And these 2 corridors move in opposite directions and create linking structures where Cacao is. And then it all drops down 100 meters to the south. So we've complete many targets are drill ready. We've done this during the bear market and during the permitting phase of the main pits. So we've done all this soil geochemistry and getting it all ready, airborne geophysics and structural geological mapping, and we're spoiled for targets. This is just showing a highlight with a Canadian peer group. We are TSX listed as well, and all these are all the open pits over 3 gram material. This is one of the highest out there of over 1 million ounces. And similarly with discount to NAV and so forth, where this is the multiples of developers, and we turn out pretty cheap compared to the Canadians, and price to NAV, well, they're cheaper at 0.36 here. So what are we up to right now? We've got 55 employees. We've just taken on 5. We've taken on a mine planner, an architect, a civil engineer both of them have worked at nearby operating mines for several years. We're buying all the surface rights. We actually bought about 8 hectares in the pit a week or so ago. Last week, actually, I was here. We signed a check for $400,000 for that. So we've tied up a massive amount of the main pit now. We're fully engineering everything. We've got a drill rig on the tailings storage facility. We've drilled about 11 or 12 holes of geotechnical drilling to get that fully engineered, site-wide water balance. I was on the phone today for an hour and a half with SRK in Cardiff for doing that study. That's progressing really well with in-pit water diversions. And we're getting it shovel ready. And the short-term objectives is to get the balance of the land. That's not going to be an issue. We've got the full support of the government. We're running the company as though we own 100% of the land now, and it's just tidying up a few small pieces with difficult landowners. The last few percent are always difficult. Infill drilling, we're getting on with the main pits, the mini pits, as I say, on Landia, which we announced on Monday. I can comment on any Q&A. We'll start drilling Mestiza high-grade pit and infill drill there ahead of production next year. Deposit on a processing plant, we're working on that. Advance further the engineering studies, and the site preparation, we're very close to. We've got all the plans and ready and good to go on that. Environmental and social, the social license to operate, we're very conscious of. Of course, that's how we've got permits. We do huge amounts of local communities. I encourage everyone to look on our website, and we do quarterly reports which are voluntary to IFC standards for environmental and social. Just in the interest of time, I'll go to the summary page here. So we're fully permitted, that's the key thing. to construct and operate a mine producing 120,000 ounces of gold a year. We can increase that by adding an underground. And we've got a district scale potential of 5 million ounces. We've got one of the lowest all-in sustaining cash costs in the world at $690 all-in sustaining. We're fairly undervalued, and it's high grade. In terms of shareholders, the management, previous question, owned 20% of the company, Jim Allen and myself, and we've got some other strong shareholders. And the rest is a little bit more about the board and resource tables and stuff, which is on our website for people.
Okay, it's fantastic to see you there in the field, so to speak, and yes. the connection's been fantastic. It's really remarkable. You can be there, and it's like you're, yeah, you can be. I think it's fantastic. Anyway, yeah. On with the questions. How close are Condor to a toll agreement?
Well, we've been negotiating a toll agreement for some time with one of the nearby mines. Like any agreement, it takes two people to sign an agreement. So the last correspondence was this week. It's obviously a price-sensitive thing to go into because that basically puts us into production straight away without any capex, without having to build a mine. But we continue with those negotiations. I don't want to be drawn on a time on signing for it at this junction, but I think it's fair to say that both parties are interested, and we're certainly keen to see some cash flow coming in the door.
Okay. Next up, how far into finance funding are you for first production? And is there a usual requirement from the funders to stipulate a certain cash balance to release the first drawdown, which may result in a share raise?
Okay. Well, we had $10 million of cash in the bank, as I mentioned, in June, July this year. We have some warrants that are being exercised by February, so I expect that to come in because they're well in the money at the moment. So that'll give the company a bit more cash. We don't have the construction capital at the moment to construct a mine. So if we put something up, we'll need to raise the construction financing. How is that financed? Well, typically these are a mixture of obviously debt and equity. It might be 60-40, 70-30 debt to equity, but we can also throw in gold loans to that. And there's a lot of demand for the physical offtake where people lend you money and you repay it in gold out of production. That's very popular, and we've had several approaches on that at the moment. But the question's correct. You tend to use first will be the equity, and then probably a gold loan, and then finally a bank. Also domestic banks in Nicaragua and regional banks, development banks that are very interested in lending to us because this is the poorest country in South America. So we've had discussions on financing, but that'll become clearer next year.
Okay, next question. You mentioned commercial production of 1,000 tons per day, TPD, to 1,500 in 2021. Can you expand on that? Can a plant be built that quickly?
I'm not sure where. I gave a couple of scenarios. The base case is 3,500 tons a day. That produces 120,000 ounces of gold from the 3 permitted pits. That's the 1.1 million ounces of resource permitted. And I gave you the mill feed numbers, but that would be 3,500 tons a day. If we were to go for the smaller plant, that would be smaller, say 1,000 or 1,000 tons a day is a number I put on the presentation. It could be 1,500, for example. The capital cost of that would be half. And it might make, so we're looking at, do we put a smaller plant up to minimize share price dilution coming into the financing? But twinned with that will also be toll milling. If toll milling comes off and we can toll mill 40,000 ounces of gold a year, that's material at $1,800 gold. You know, you've got $70 million of revenue coming in. Yes, we've got to share that with the processing plant, but there will be cash flow coming out of that, which we can use to fund the operations and maybe some of the development as well. So, but our goal as the management having 20% is minimum share price dilution and maximum share price. That's what we're focused on.
Okay, next up is a question about land. What if you don't manage to buy all the land? Could there be a scenario where landowners hold their land to ransom or won't sell for reasonable amounts?
Yes, I thought the question was probably asked before my presentation, but we're confident we're going to get 100% of the land. So if I go through what we've got 100% of now, we've got 100% of the plant location, we've got 100% of the tailings storage facility where the waste goes, or from the plant goes, 100% of the water retention dam, 100% of the explosive magazine. If we take the open pit, which you can't move, we have 97% of the land within the pit perimeter. We have about 90% of the waste dump. The government is massively supportive of the project. I met the minister one-on-one 4 weeks ago. We told him that we need to get the rest of the land. And yes, just like compulsory purchase orders in the UK, works slightly differently here. People are being made offers several times the local price for land, so they're doing really well out of it. I'm confident that we'll get the rest of the land. It won't hold it up, is my answer.
Okay. I'm not sure how much you'll be able to say to this question, but has there been any interest from any other gold miners to buy or JV with Condor?
You're right. I can't really say much about that. Look, there comes a point where projects like us, we have a strategy to construct and operate the mine. So the company is being run to construct and operate the mine, as I've said in my strategy statement, and to double the ounces to 5 million. We're listed. There's a shortage of projects on the world market that have this sort of scale, have these low all-in sustaining cash costs. You own 100% and you're fully permitted. And the bigger guys, quite often let the juniors like us go on the frontiers and find it and do the hard work and get all the land, for example, and everything else, which has taken us 9 years. And then they might come and say, thank you very much. But that's just like oil exploration companies, but that's outside of my control. I don't want to comment on whether we've had people knock on the door. If there's anything material, we'd have to announce it to the stock market, so there's nothing material.
Okay. You mentioned a couple of times you believe the company is undervalued. And what's the main thing holding it back? Well, the valuation back, I guess, is the...
Yeah, I think that's a good point. I think London is one of the reasons. I think that to some extent that exploration companies pre-production aren't really appreciated in London as a stock market, whereas in Canada they are. 90% of the exploration companies in the world are TSX listed. We are TSX listed, but we haven't placed shares out of there. So I think partly linked in with that, partly linked in with Nicaragua. There's been a risk associated with Nicaragua, and I think from London, most people couldn't probably put where Nicaragua is on the map, whereas they can put where Ghana is or other places in Africa, because they go to the holidays and the African element. A perception of political risk, although I think if you come here like I do, that's minimal, but it is a frontier market with risk associated with it. So I think it's a combination of those things. We've also had 3 years of delays. We started to permit this 3 years ago. We said we'd resettle the village of Landia. The benefit of hindsight, that was a mistake. We had to redesign things in a bear market to avoid any resettlement. And then 2018, there was a setback politically, where 300 people there were some riots and 300 people were killed. But that's all behind us now. And so I think to some extent, some people have lost the faith and lost the story. But now the company operationally has never been in a stronger position.
Okay. Has there been any progress on sourcing second-hand plant?
We have a twin approach of sourcing second-hand plants and sourcing new plants. We have quotes out of China. I've been on email this week last week about new plants out of China and out of second-hand plants. So we'll look at both. The problem with second-hand plants is they don't come with guarantees. We're also dealing with people who may lead you down the garden path a bit. Again, it's a bit like toll milling. It takes 2 people to sign an agreement, and if they want to mess you about and then try and flip it to someone else at a higher price, they can do, depending on who you're dealing with. So I want to just be cautious. We're keeping all options open, and we'll do what's best for the company.
Okay. Would Condor offer to process the Artisanal Miners rock production? Would this be something to gain community support?
Yes, I think we would. we've got 3 people working Artisanal Miners on our payroll, i.e. we have an Artisanal Miners engagement plan, we've got work with them. There's probably over a couple of 100 tons a day at 6, 7, 8 grams coming out of the being by artisanal miners here. It's being treated with mercury, which gets flushed into the water table. It's being treated with cyanide. It's horrible stuff for the environment and for individuals to touch and handle. It would make a lot of sense for us to actually have a separate layup area, buy that off the artisanal miners at a higher price than they're getting at the moment, because they only get a 50% recovery, putting that through an industrial state-of-the-art plant, and then the waste going into our PVC line tailing storage facility. So yes, I think it would make sense for us to do that. So that's only going to be, theoretically, just on the numbers I've given you there, there's an incremental 50 to 20,000 ounces of gold that we would be processing for artisanal miners.
And there's a question here with Mako. I think I've covered this in part already, but with Mako starting to produce early next year, is that an option for toll milling? Has that influenced anything with caliber?
That's an interesting comment. So this is the 4th mine being built in Nicaragua, for your viewers' knowledge. It's 500 tons a day, so it's relatively small. I mentioned our bigger mill is 3,500 tons a day. They've said on their press releases they're going to start next month production, first commercial gold pour, but maybe they'll be fully operational in terms of production 3 months later. I don't think there's been an update to that timetable. I suspect Mako has recently had a resource downgrade of 70%, so they didn't infill drilling, that wasn't there, and they remodeled the geological model. I suspect that they have enough to fill the 500 tons a day. They have an expansion capacity to double that. And in that sense, yes, it could well increase our optionality to toll mill to caliber, as well as, or to toll mill to Mako as well as caliber mining. So it offers some optionality for us in terms of early cash flow. I think Mako, though, are focused on actually doing that first commercial gold pour in January. There's no point us getting too. We're in regular touch with Mako Mining. We sold a concession to them 12 months ago for $650,000, a Portuguese concession. So I know the management pretty well. I met them over a dozen times over the last 7 years. So the door's open there. We have a good relationship with them. Let's then produce their first gold pour and focus on that, and then see whether there's any room for our.
Okay. Question here. There's 2 from the same individual. I'm an 800k share private investor. Keep it going. Hope it all pans out. And then the same person said, is the infill drilling intended for mine planning once the mill is constructed, or for toll milling short term?
It's for both. It's for whichever way we go short term. Whichever way we go, we have to do the infill drilling. We already have mine schedules, incidentally, for the mini pit. So we have design pits. I mentioned on the announcement on Monday this week that those starter pits, there's 60,000 ounces of gold there at a 2 gram cutoff for 4.2 grams. And if we lower the cutoff grade, we have about 70,000 ounces at 3.1 grams. We're drilling it to 25 meter center, so we might actually end up with measured there. And you have measured, indicated, and inferred. So we're doing it very tight. So that, I hope we get some measured resource back on that. But it'll be absolutely the final drilling that we need to do from reserve definition drilling ahead of actually extracting it. But it gives us the flex. So we have to do it whether we put it through our own mill, our own smaller mill, our own bigger mill, whether we toll mill it. We need to do that exercise. And so we pushed the button and said, right, let's do that. Let's remind the market we've got a very high grade open pit that's highly economic. And then that starter pit at Lander, we just do the maths. The numbers are all there on the stock exchange announcement. You have to crunch them. But just to help your viewers, 60,000 ounces would give us at $1,800 gold, would give us an operating profit of about $60 million just out of that. And it's 35 meters deep, so it's scratching the surface, and it's only 10% of the pit. With a lower cutoff, it would be about $75 million. So it just highlights, and that's your free cash flow coming out of it.
Okay, last question now, Mark. Given the lack of appreciation for the company in London, would you then consider placing shares onto TSX to generate Canadian/North American shareholder interest as part of the equity element of plant financing?
Yes, we would consider that. That's why, that's why we've got the listing there. I got criticised for doing it in a bear market. We listed in January 2018. I went around Canada and said, oh, maybe we could raise $5 million. Everybody said, no, you can't do anything because Canada was shut. And that's part of the message here is Canadian stock market can be closed 2.5 years ago. January 2018, it was only interested in cannabis stocks. Now it's only interested in gold companies. And a bought deal could come to us at some stage in the future. And that's how it works in Canada. And so I was like, here you are, here's $20 million. We might just say, that's fantastic, thank you very much. It gets that liquidity and story going. But we need to get some free float and shares trading in Canada. And I don't think just placing a few $1 million there creates liquidity. London's been quite good to us over the years. We've raised all our money in London. So there's cash in London for financing. The biggest mining companies are there in London. And I think it's fair to say we'd like to look after existing shareholders who supported the company over its 15 years of being London or AIM listed. But I do think it does make sense to increase the float and place some shares into Canada at some stage in the future. But we'll keep our options open.
Mark, thank you very much indeed for joining us, and I'm really pleased you could come on tonight. So thank you very much indeed.
Thank you. I'm off to go and see the drill rig now. So
fantastic.
I'll send you a photo.